Hej och välkomna tillbaka. Jag heter Robert Tovi och är analyschef på Erik Bank. Och jag är stand-in här för Marcus Almerud som är ansvarig analytiker på det bolag som vi nu ska lyssna till. Nämligen Bergman och Beving och Magnus Söderlind som är CEO för bolaget. Och för er som inte känner till det och väldigt snabbt innan vi släpper in Magnus så är ju Bergman och Beving verkligen ett gammalt anrikt svenskt bolag som bildades 1906 av Arvid Bergman och Fritz Beving med då en affärsidé om att investera och i agenturer och import av tekniskt avancerade industrikapitalvaror. Idag med fokus på industri- och byggsektorer. Det är ju sektorer som är lite granna i fokus just nu får man väl ändå säga. Så att det ska bli jättespännande att lyssna till dig Magnus. Välkommen hit. Ni är också en koncern lite granna i omstöpning och har en historik av ett fantastiskt värdeskapande genom ett antal framgångsrika avknoppningar. Så välkommen och varsågod.
Thank you very much and thank you for the introduction and actually relating to your introduction, this was the headline about Bergman and Beving in 2021 in the biggest business newspaper in Sweden, Dagens Industri, the ancestor of stock market rockets. And you touch upon the reason maybe that they chose this headings, but I will also come back to that a little bit later on in my presentation. But firstly, just for everyone to get an understanding on what Bergman and Beving is about today and the key figures. We have a turnover just below 5 billion SEK and with an EBITDA margin just below 8%. And we have an earnings per share at 7.90, and this is rolling 12 figures ending December, by the way. And we are roughly 1,300 employees. And we are listed on the Swedish Stock Exchange on the mid-cap list. But if you look under the hood, you will find 23 companies in our group today, divided into 3 divisions. One is the building material division, focusing on solution and necessities for the construction industry. And the other division is workplace safety, and that includes product and companies focusing on personal protection equipment and work environment safety. And the third division, tools and consumables, is including companies selling hand tools, machinery, and supplies. And the group today consists of 23 autonomous companies. And they're actually then self-sufficient and driven in a very decentralized way, meaning that each individual company had their own management team, they have their own business plans, and they have their own targets, and they work very independently, and we act as an owner and support and challenge the development in the company as such. So if you look at our markets then, 75% of the sales is in the Nordics, and the product companies are then typically selling outside the Nordics, and we're actually representing in many other countries and have over 4,000 points of sales across the world. And I will actually come back and just give a flavor of some of our companies that we have in our company later on in this presentation. So what is then Bergman and Beving doing? We are acquiring and long-term develop leading companies in expansive niches. And with that stated, we have we don't buy to sell. We keep the companies over time and stand with them when times are good and also when times are bad. But in our business model, since we're listed and don't have any fund structure or similar, we don't have any reason to sell. Instead, we build shareholder value by improving profitability in the companies that we own in the group. And we have chosen to focus on companies that have a leading position in an expansive niche. And if you look at the picture, this is one of our companies called Teng Tools, and they are doing high-end professional hand tools. And this is the customer you see on the picture. It's actually an aviation service company that then use the Teng Tools to service aviations. And this have a lot of extra function, digitalization in terms of RFID to detect all the tools, because you need to make sure that new tools remains in the aviation after the service has taken place. So it's a lot of add-on services added to the tools, and actually a niche there is not so many players, and where Teng Tool have a strong position, and they are represented, for example, all the way in Australia and New Zealand and those type of countries across the world. So this is a typical type of niche companies that we own, and there are very similar characteristics in the other companies that we own as well. But there are some focus areas for our product companies, and that's actually to focus on increase customer productivity, safety, and sustainability. And as you may know, the labor cost is quite high in the Nordics, so a Nordic customer tend to be very focused on increased productivity. And safety is also a very important theme in the Nordic industries. So by building strong brands in the Nordic region give us very good platform to expand internationally when those market tends to mature, which exactly typically happen over time. And lastly, then we are focusing on companies addressing the industrial and the construction sector. So just to give you a flavor of what type of companies that we own then. SV is a company within the building material division and has a turnover just around 1 billion SEK. And SV is the Nordic market leader within fixing and fastening products. And for example, every day they are selling more than 5 million SE screws around the world. And here, going back to the productivity theme, you see a picture here, nail-in door. That's a patented concept owned by SV that actually reduce the assembly time with 50%, reduce waste with 50%, and it creates a lot of saving in working time. So it's really, once again, to reduce the cost of using the products and the solution that SV offer, and one part of that is also reduce the time. Another example of a company within the group is Cresto Group. And as you can see on the picture there, it's actually about delivering products, helping companies, people to work on high heights. So it's actually a solution that enables that security. And this is a company with a turnover about 340 million, and it's really a profitable company with very high margins because they have built a leading position in the Northern Europe region, and by that also the customer is also a customer group that typically is not so price sensitive. It's very focused on high quality and safety. And I said earlier, we work with acquisition as a core element of our strategy, and that also includes add-on acquisitions to the companies that we think have a good possibility to grow profitable. So this company has actually acquired 5 companies the last 3 years, whereas Abtech and Safety Technology is 2 UK companies, where one of them have a subsidiary in the US. So we also build a platform into US in this acquisition. And one other acquisition add-on to the Cresto Group is SafeTime. It's actually a Slovakian company who has a leading position in Slovakia within the area, but also have a production site that enables the whole group to leverage high quality, low kind of cost-effective production. And then the third example of a company in a group is within the third division, Tools and Consumables. This is a Finnish company we acquired last year, Polarterm, with a revenue of 120 million SEK, with a very, very good profit. And they are actually international leader in powerful mobile heating units. and they are selling those across the world. And actually the US Air Force is a big customer of Polartherm. So it's really about building a leading position in very large, robust mobile heating solutions for very specific application areas. So as you can see, we are operating in many different niches, within many different products, in many different geographies. But the common theme is once again to have a leading position in a niche and also help the customer to be more productive, safe, and sustainable. So going back to the strategy, as Robert was saying here in the introduction, we're actually founded back in 1906. And so we have been around for more than 100 years doing acquisition and developing profitable companies long term. And the strategy in doing that is to have a very decentralized governance model. And the strategy is basically for all our companies, once again, to strive for a leading position in the market niche, either through add-on or organic growth. But if we look into new niches like the Polartherm and the mobile heating unit, we typically acquire us into those niches by acquiring a company, and that has that as a platform to further expand in that niche. Since we're very acquisition intensive, we of course have a specific acquisition strategy, and we have some acquisition criteria. This is just a snapshot of some of those. It's not a complete list, but we are looking, typically if we look at new platforms, we have a find a sweet spot in companies earning around 1 to 2 million euros in EBITDA. We think that is a decent size of the company as a starting point, and then we build from that. And if we look at financials, we typically look at companies with a solid margin about 15%. And then we have our own internal simplified measurement for return on capital employee. That is EBITDA over working capital, and there is the threshold at least 45%. And that is an important target to be self-sufficient in generating the cash flow that could help us continue build and invest in the companies that we own in parallel with acquiring new companies to the group. And if we look at acquisition, we typically favor product companies with an own product portfolio, and where they should own the IP, and then once again having a leading position in a market niche. But we also look at other type of companies who kind of fulfill the financial targets. So it's not only product companies, but mainly product companies. And once again, we focus on companies then addressing the industry and the construction sector. And we have, as a geographical scope, chosen to focus on Scandinavia and Great Britain in the first hand, and secondly in Northern Western Europe. And we actually acquired 2 companies here in February, and one was then in Finland and one was in the UK then. So going back to the heading from Dagens Industri, the ancestor of stock market rockets, and I would try to give you at least my explanation why they put that title on us. So once again, we were founded back in 1906, and we were listed on the Swedish Stock Exchange back in 1976. And then 2001, we were close to 200 companies in the group. And then we actually spun off 2 companies, Lagercrantz Group and Adtech, both on large cap today. And then Adtech in turn actually spun off a company called AdLife some years ago. That's also is on the Swedish Stock Exchange. And then next time for a spin-off was back in 2017, and then we spun off Momentum Group, that actually now acquires Swedol and is part of Alligo, and Alligo in turn spun off Momentum Group that is now also on the Swedish Stock Exchange. So as you can see, we during our journey here has created companies with a market cap close to 100 billion SEK. So I think that was one of the reasons at least why we got that title in Dagens Industri. After the spun-off of Momentum Group, we had some things to get in place in the group. So we had kind of a regrouping phase during 2018 and 19. And then since 2020, we now focus on profit expansion, and we have set the target to at least double the profit latest by fiscal year 25-26, and that translates into 500 million SEK in EBIT. And we are on that track currently. And this is the latest 12 quarter, and as you can see, we will increase the profit in 12 consecutive quarters. And that is the plan. We are following the plan of double the profit. And if we look at the Q3 result that was end December, we have not only a profit in absolute term increase, we also have a margin increase. So we improved the margin close to 1% unit. And the positive thing is that all our three divisions is contributing to the earning improvements, and the minority of, and we were 21 companies then in December, has contributed to this increase. So it's not a single company or a single division that actually have this positive development, it's across the group. So finally then, how to get to the 500 million profit? It's about developing the current portfolio, improving profitability, earning, operating margin and cash flow. And we have plans for that in all our companies, company by company. But I just shortly want to mention the allocation with the capital allocation model we use when we make up priorities as owner for different companies. And we have this, we call the focus model. And on the x-axis, we have this profit of working capital, the simplified return on capital employee measurement. And on the y-axis, we have profit growth potential. So we actually put all our companies in the different buckets, and that actually decides what type of agenda the company should have. So if the company is above the target of the 45% profit of working capital, and we see a profit growth potential in the business, we urge the company to grow organic or by add-ons. And I previously talked about the Cresto Group has been on that add-on path, and that is typically relating back to the focus model. So this is the model we use and decides what type of agenda the individual companies have in the group. And once again, we see a lot of potentials to improve the profit across the group. Short term, of course, we are facing a very uncertain business climate, so we have been proactive and made some cost savings across the group, but also by that also increase efficiency and profitability, unrelated actually to the underlying demand. And we also currently work with reducing the inventory levels. We build some safety stock during these disturbed corona times, and we are now working to work that down and release some cash flow. And it's a kind of a turning around a big container ship, but we will see some effects here in the next quarter and going forward. So that will actually help the cash flow in a very good way. And lastly, continue to acquire companies. We bought 2 in February, and we see some good opportunities actually to make some good acquisition as well going forward. So we haven't lowered the ambition of acquiring 4 to 6 companies per year, and we will continue to work on that. We had a temporary stop during autumn last year because then we thought the climate was a little bit too uncertain. But it's never sure where this will go, but we feel a little bit more shorted going forward now. So with that said, to summarize, we have been around for many, many years. We have a proven business and governance model that has shown over the history to deliver great returns to shareholders. We have a program to expand the profit by double and increase, deliver 500 million profit. And we are on the way to execute on that. And I have communicated that with the information I have today about the business climate, I can't see any reason why we shouldn't be able to deliver on that target or that ambition. And myself and the management team of Bergman and Beving, and also the company leaders, have all skin in the games and are all committed to deliver on the plan. So I feel confident for the future, and I hope this gave you some kind of overview of what we are doing and where we are heading. So thank you very much.
Thank you very much, Magnus, for that great presentation. So, if I may, could I just ask you to back up to a previous slide that you had on the ancestor graph with your history? That'd be very helpful. Maybe we could discuss just slightly around that. So it's very clear that over the years you have been driving shareholder value through being a long-term owner of and developer of the companies you have acquired to the group. But you have also created a lot of shareholder value through the spin-offs.
Yes.
Could you just shortly go through what has been the driving force for these historical spin-offs? And is there any idea to look upon the company from that view today?
Since this was before my time, you have this as a second-hand information. I was referring to our governance model that has shown to be very successful over time. It's really about decentralization. And when the group consists of more than 200 companies, it's very difficult or challenging to have a very flat organization. So you start to build big overlaying organization, and you kind of slowing down the decision process, and you create a lot of administration, and the management is getting too far from the company and from the markets. So one of the main reason, at least to my understanding, was to make sure that although the companies are flat and very decentralized, and by that are able to take quick decisions and not create a lot of administration and time-consuming decision processes. I think that is one of the kind of more operational reasons that still is very important also for kind of doing those spin-offs. But with that said, if you look at Bergman and Beving today, I don't think you should encounter any spin-offs in near term. We are a very flat organization. We are 10 people at the holding company, and myself is part of 7 of the biggest company boards. So by that, we haven't built any layers yet. So we have a very tight and speedy interaction with our companies. And I think that is very important, and I can't see that we shouldn't gonna be able to keep that in the next coming years.
Okay, that's great. So moving from maybe strategy to what you see in the market today, we've seen kind of a dramatic development within macroeconomics globally. And also in Sweden. In terms of demand, pricing, maybe not the least within the Swedish building sector, what are the influences that you get, the signals you get for the time being?
We get the same signal as I think we can read in the press. In the B2B, still the kind of demand is quite stable. We don't see any big changes in the demand. It's definitely not going up, but if there is kind of a decline, is not in a bigger magnitude.
And to the extent
specifically, specifically to construction sector, you can read, and especially in Sweden, I mean, new building is really suffering currently. But our companies are not typically working, selling investment-related products. It's really consumable products. things that is used in the building process. And they are not affected by start of new buildings. It's kind of a delay of, I would say, 1 to 2 years in the building construction sector. And of course, if this downturn in new building will continue over time, we will see effect further down but not currently. And if this kind of doesn't, if this pick up, I don't expect any big effects, 2 years down the road on our companies.
Great. And then just finally, maybe I think it's worth touching upon this. We have, as I can see or understand it, we've seen kind of a lower organic growth, but that has a lot to do with you guys phasing out unprofitable products. Could you just maybe give us a flavor of how that is progressing and where you see the coming 2 years within that strategy?
Yeah, that's correct. We have chosen really to have our companies focus on where we can add value, and that typically translates into the gross margin. And there have been some volumes that has been more of a distribution business with typically lower margins. And by purpose, we have chosen that is not the market space we should be within. So we have, during the last years, I would say, phasing out high volume, low margin products. So that is one of the reasons why the organic growth hasn't been that good, but the profit growth has increased, and profit margins have increased over time instead. So that is part of the strategy, and then we will continue with that over time. It's not something that is done over a quarter. It's a continuous process, and that process will continue for some quarters going forward as well.
Okay, Magnus, thank you so much for attending Bolagsdagen today. It's been really interesting listening to you, and we hope to see you going forward also at the bank.
Yes, thank you, and hope to be there live next time.
All right, great.
Okay.
Thank you. Bye-bye.
Thank you. Bye-bye.